Okay, so Precious Metals update here. We had the CPI release this morning. This is July 13th, Wednesday night. And so we potentially had our daily cycle low for gold today, day 41. That was actually the daily cycle before last was 42 days, so that'd be right in line. Our high was day 19. So that makes this slightly left translated, but in reality it was incredibly bearish because we really just went sideways here and then just collapsed. The important thing here is that because we're so late in the weekly cycle, it's week 30, that suggests that any daily cycle low is also going to be a weekly cycle low. So that's the good news. The bad news is just because we're starting a new weekly cycle doesn't mean it's bullish. Like, that's a really important concept to understand. I'll just flash over to the NASDAQ chart to show you the quintessential example. We topped out on week 2. Look at this, right? So you could have gotten really excited about a new weekly cycle. Oh, yes. And then it just tops out on week 2. So you got to be careful there. And for gold, we want to consult the monthly chart to understand where we might be. You hear about this 7 to 8 year cycle. If it's 7 years, it's about 84 months. If it's 8 years, it's about 96. So you think about a cycle somewhere between that range. So call it the long-term cycle for gold. The previous long-term cycle was 86 months. One before that, 92. One before that was 96. One before that, 97, 102. That was a really long one. So we are right now on month 79. Our high for this cycle so far was month 56. That was the high from August 2020. So almost a full 2 years we've been doing this. And people have been saying that we're in a bull market. Now, sure, we're still higher. This is still like a quote unquote bull flag, right? But I mean, going sideways to lower for 2 years isn't my idea of a bull market. And more importantly, we came within $5 of making a new high in the sort of war-fueled run-up earlier this year, but we did not. That turns out to have been a really important clue. We're now on month 79. Our high was month 56. So think about that. If we're going to get a cycle that's somewhere around 84 to 96 months long, what are the odds that we're going to have a bullish reversal, make a new higher high, in the 2100 range, maybe even surpass that, and then fall into a long-term cycle low, right? Another way to think about this is, are we in the advancing part of the 8-year cycle or the declining part, right? Like, what are the odds that we're still in the advancing phase, right? And like, we're going to go higher and then we're going to have a declining phase, versus the declining phase actually started here. And this consolidation is just kind of the starting point, and we'll eventually grind our way lower. And it doesn't mean we have to go down to like 1,000. It just means we may not see another all-time high until we get that long-term cycle low. And if you look at silver, picture's not looking much better, right? For silver, instead of making a double top this year, we didn't even come anywhere close. This is just you can draw a trend line. This is just a downtrend, right? We topped out, and then we've just been cascading lower. And for silver, we're on month 20, or we're on week 24. So similar to gold, this DCL will probably be an ICL, a weekly cycle low. But then we have to see the strength of the bounce, right? Do we top out maybe here around the $21 range? So you get a couple dollar rally and then you kind of roll over. We're going to have to be on guard for that. For silver, today we actually did not make a lower low. That low happened on Tuesday, so that Tuesday may have been the daily cycle low at day 42, but we'll have to watch to see how the rest of the week trades from here. And finally, we'll look at GDX, which has just gotten walloped. So GDX, day 41, possible daily cycle low here, week 24. And did we make a new lower low? Yeah, right. So we made a lower low by literally 1 penny. So 26.03 versus 26.04. So we could be getting our weekly cycle low here. You could see a world where we rally up to the 10-week moving average and then get rejected. And think about the longer term picture here for GDX. So we had our big COVID low, this big candle here. And then we had this rally out of that low. That entire rally lasted 5 months. And since then, we just been cascading low. Well, not cascading lower. We've been going, call it sideways to lower if you want to be generous. And so in the same way I showed that QQQ chart where we topped out on week 2, well, think about this is the same idea on a higher time frame, right? In this case, we topped out on month 5. These are important things to watch. Like you can pull up a chart and see these things yourself. Like that gives you a sense of the risk reward, right? And so at some point, this thing is going to run again, but we may have a lot of wood to chop into the downside, especially in terms of time, if not price as well.